Welcome back to Another Thing. As you just heard in our last segment, there are big changes in deregulation in the banking industry, and that's part of the rally in the stock market, but they aren't the only changes. To talk more about that is John McWeeney, is the president of the New Jersey Bankers Association. Sir, thank you so much for being here.
Thanks for having me.
I appreciate it. Let's start with the deregulation and then get into the technological changes.
Sure.
The deregulations, is the banking industry waiting anxiously for this?
Well, we feel there's definitely a need for some rollback of some of the regulations. You know, we came out of the financial crisis. There were issues. The Dodd-Frank bill was passed. 24,000 pages of rules and regulations, and a lot of it very good, but on the margin there's some things that could be done that would help banks serve their customers better. And I think now with the current administration in Congress in Washington, there's some optimism that there will be some refinement.
And what will happen? How does that affect us when the deregulations are rolled back?
Well, I'll give you one example. One of the rules is related to consumer mortgages, residential mortgages, and there's some very strict guidelines that banks can't give mortgages if people don't have a certain expense-to-income ratio, a certain income level. If they make a loan today and the loan goes bad, they can be sued for that, even if they hold the loan on the books of the bank. So they're going to suffer the risk if the loan goes bad. So that's just one example. We call it qualified mortgage rule, where we want banks to be able to make those loans if they're willing to take the risk and hold it on their books. If it goes bad, they're not trying to do any disservice to consumers. They're trying to help their customers get mortgages. So that was an unintended consequence. And
you have some confidence that's going to change with the current administration?
We do. And
so
actually,
the stock market.
We actually think there's some bipartisan support for some of these rules and regs that both sides of the aisle would agree, you know, could be refined somewhat.
So let's talk about other changes in the banking industry now. There was a time, I remember, when online banking came around where most people didn't trust it. That's changed. How many people do their banking online now?
Recent surveys done by the American Bankers Association, they do one every year, indicate about 55% of consumers prefer to do their banking transactions online now. So that would be the largest category in terms of consumer preferences.
And I'm sure the banking industry is responding to that because fewer and fewer people then are coming into the bank.
Yeah, absolutely. A lot has changed in the branch environment. We see fewer branches today, although there's still over 92,000 branches across the country. Here in New Jersey, I think we still have 3,100, so there's plenty of opportunity to go to the branch, but there's not as much transaction activity being conducted in the branch. So you're going to start to see fewer tellers, you're going to see smaller branches with more technology, just because a lot of people are using other channels now. They're using online, they're using mobile, et cetera.
And tellerless banks, they're popping up now?
They're starting to. I think here in New Jersey we might have a couple, but I think you will see more over time. What you are seeing more commonly in New Jersey is branches with maybe 2 or 3 or 4 employees, and they wear a lot of different hats.
Well, tell me about a tellerless bank, because I haven't been to one yet. I'm sure most people in the audience haven't been to one. Can you do everything there?
It's going to be a self-service type facility, so you can.
I can get a mortgage there. I can get a loan there.
Well, you know, I'm not sure that all those services are readily available there, and I don't really think consumers want to go, you know, to a self-service place to get a mortgage. You can apply for a mortgage online with banks and even non-banks, but I think a lot of people still, for more complex transactions, like to sit down face-to-face and talk to a human being.
Do you see a difference in that? Has there been studies done on that, what people go to the bank for and what they do online?
Well, we know that the things that they do online are on mobile banking, for example. They check their balances, they transfer money between accounts, they get alerts if a credit card transaction or a check has been processed over a certain dollar amount. So they're very comfortable doing those things online.
How secure is our money online?
I think our money online is very secure, and the banking industry and the security companies and the companies that support banks with their data systems are investing billions of dollars to protect it. But there are a lot of fraudsters out there. I mean, I'll give you a recent example. One of our banks shared with us is they had someone come to their bank and they put these skimmers in the ATM machine. They drop this device down there, you can't even see it, and it tries to read somebody's ATM card. And if they get the card number, then they can go out and make withdrawals. The banks are very good about this. This particular bank, they caught it like within 24 hours. They did suffer a loss, not the customer, the bank bore that loss, and they're making changes. But it's just a constant battle to stay ahead of the bad actors out there. But I'd say overall, consumers should feel very comfortable. And they are, because we see the levels of mobile banking activity, online banking activity increasing.
And I would think that's one thing to remember. The example you gave was a good example because the customers don't suffer. It's the bank that takes the loss. It's the bank that suffers. That's almost an all fraud, right?
That's exactly right. That's exactly right.
Yeah, so it looks like it's going to be a couple of good years for the banking industry ahead. That's your forecast?
Well, I think so. The economy is better, and that's the number one thing. As the economy is better, our banks are going to do better. They're lending money, and that's primarily how our banks make money. We do think there'll be some relief on the regulatory front. And interest rates have been historically low, and banks tend to do better when interest rates are a little higher. We're seeing the Fed start to raise rates.
Wonderful. Thank you, sir.
Thank you very much.
Appreciate you being in. John McWeeney, president of the New Jersey Bankers Association. When we come back, are you worried your teenager might be doing drugs? Now you can rent a drug-sniffing dog. Dawn explains when Another Thing continues.